Hi and welcome to the Stephan Livera podcast focused on Bitcoin and Austrian economics. Today I've got a really special guest. He is Trace Mayer. But first, let me introduce the sponsors of the podcast. So firstly, Kraken, one of the world's leading Bitcoin exchanges, renowned for their focus on security and acting in a principled manner in the space. They're one of the longest standing Bitcoin exchanges. They're consistently rated the best. They have high trading volume and low fees, with no minimum or hidden fees. Kraken have 24/7 support, and on the institutional and business solution side, they're providing best-in-class accounting, reconciliation, and reporting services for cryptocurrency hedge funds, asset managers, and fund administrators. Kraken have an OTC desk for large block trades. They offer 5 fiat currencies and also offer margin and futures trading. To learn more and sign up, go to kraken.com. There's a link in the show notes. Next, Unchained Capital. Have you listened to my recent interview with Dhruv Bansal from Unchained? We talk about some of the Unchained products, such as the 2 of 3 keys multi-signature Vault product and also the Bitcoin collateralized loan. So with the Vault, you can use Trezor or Ledger. Coldcard is coming soon, and you can split up your keys rather than creating a single point of failure risk. Also, with the Bitcoin collateralized loan, you can get USD without selling your Bitcoins. While that loan's outstanding, it's stored in a dedicated multi-signature address that you can see on the blockchain under collaborative custody. So get in touch with the guys. Go to unchained-capital.com. There's a link in the show notes. So the episode today is with Trace Mayer. I assume most of my listeners know very well who he is, but just for those who are newbies to the space, Trace Mayer is a highly influential investor, writer, speaker, and podcaster in the Bitcoin world. He's been around Bitcoin since the early days, and more importantly, he wasn't just early, he was right on basically every call he made. So his perspective is highly valuable, and I'm sure you'll enjoy listening to him on a range of topics in this interview. Trace, I'm a big fan of your work. I know you're very influential in the space in the way that many of us think about it as well. I mean, you're responsible for popularizing many different ideas, such as, the 7 network effects of Bitcoin, hodlers of last resort. So it's a great pleasure to welcome you to the show.
Oh, thanks so much. And also December 23rd, 2015, I talked about the impact of stock to flow ratios on the price of Bitcoin. So I've been talking about that for a long time too. And I'm really glad to see Plan B's work in that area.
Oh, fantastic. Yeah. I think you've got a really great framework for thinking about Bitcoin because obviously you're known as a very early investor in Bitcoin. You invested in some of these early Bitcoin businesses and projects such as Armory and Kraken and BitPay. Can you give us some insight into how you came to Bitcoin so early?
Yeah, so I had studied money, always been interested in it. And when I say studied it, it was at the graduate level. And then as I pulled on those threads, I found myself in Rothbard and Mises and whatnot. So I had the philosophical foundation, the understanding of the economics when I ran into Bitcoin, in addition to having plenty of experience with things like eGold and PGP encryption and Napster, and then Kazan, LimeWire, and BitTorrent, these peer-to-peer networks that came on the scene that were censorship resistant. So, having been in the digital or the virtual currency space for a couple decades, I could see that it definitely solved a problem that the world needed solved. And then also my understanding with GATA, the Gold Antitrust Action Committee, and just the interference that the institution of the state has done in terms of censoring interest rates. So, all of that kind of combined together so that when I came across Bitcoin, I was like, oh my gosh, this is going to be huge.
That's fantastic. And I think the other thing about it is it's not just that you came to Bitcoin early. There were others who came to Bitcoin early, but then they sold out. What was it that made you have such a level of conviction about Bitcoin?
Well, I just thought about it. I think we often get distracted by various voices, and we lose our ability to kind of think and do our own economic calculation. And because I had this background, all of these skills that I developed I'd been doing all this research. Safedine likes to talk about the concept of time preference. A lot of people watch TV. When I left to go to college, at 16, I never had a TV in my house since I went to college. Like, I don't watch TV. And when you don't watch TV, you have a lot more free time. You can exercise, you can exercise your body, and you can exercise your mind. And so, and when we're talking about time preference, the greatest investment you're going to make is going to be in yourself. And that education is a key to opportunity. And you never know when all of this knowledge that you can accumulate is actually going to become applicable. And so, that's luck is when opportunity meets preparation, right? And so, I'd been honing in on little threads, little voices here and there all throughout my life. And so, when the time was right, like, I was able to capitalize on it. Would I have been able to do that if I'd been sitting around like watching TV a lot more? Probably not. Probably not. And so, a lot of people are like, oh, the early Bitcoiners just got lucky. And I suppose some of them did, perhaps, but time preference begins to sting with opportunity cost. Because think about how much money some of these people spent on Silk Road, right? Like, they were listening to wrong voices, and they allocated their capital, and they lost a lot of the resources that their future self would have had they had the discipline and the time preference and all of those things. So I think that's a very important component is, it didn't just get lucky. I developed that human capital, and we're seeing it even today. I mean, Bitcoin's been around for a decade. I mean, I've got friends that have liked Bitcoin and bought it, since it was triple digits, and they're still storing it on Coinbase. Like, why aren't they developing the human capital? Like, what's the deal? I don't understand. So, like, whatever, you're going to get wrecked one of these days if you're doing that.
It's a great point you make about building our human capital. And I'm wondering, do you have any suggestions on good resources, and how do you find out what's a good topic to go and research? What's a good book to read? What's a good podcast to listen to? How do you think about finding the good resources?
Well, I mean, you got to start with what you're passionate about and what you love. And so, because that's what's going to power you through and give you that desire to do the reading and do the studying and stuff like that. So you have to find something that you enjoy, something that you're passionate about. Even better if you can mix that with something that's going to be helpful for other people. Because that's where we really find joy. If you're just doing it for yourself, that's going to get old pretty soon. So that's where I'd start. Like, figure out like where your emotions are at, and then you start figuring out the wisest way to go about acquiring that knowledge. And so for me, I like to go to like the best. Like, I don't want to just listen to anybody. I want to listen to the best. And so, it doesn't take very long. You can sniff around in any particular area, and hopefully you're able to find the best within a day or two. And then once you've found the best, you got to start reading all that stuff, which is a lot of stuff, because the best are often very prolific in their writings. So, I mean, we're talking about the polymaths, like the Da Vinci's and the Newtons, the Goethes and the Swedenborgs, the Jeffersons, these are the best in their different areas. And in some cases, they were masters of all the areas, people like Newton and Da Vinci. So, I think that's important. People like Tesla, it's important to hone in on the best, but it takes a lot of grit to be able to do that, a lot of discipline, and you got to find balance in your life. But at the same time, like, people sitting around like watching TV and just like, what are you spending so much time on this stuff for? Another one is interruptions. People, I think, greatly underestimate the impact that interruptions have on your ability to accumulate human capital. Because if you think about these people who were the best and the type of world that they lived in, they weren't getting interrupted very often, right? They could like sit down and they could focus their mind and like read the book all the way through. They weren't getting text messages and phone calls and emails, and they just weren't distracted in so many different ways. And I think that's, I think a lot of people today, we have a challenge. A lot of people just have the attention span of a goldfish. Like, they really have no discipline of their mind. And as a result, they can't like sit and think about something. And then they exacerbate it by the stuff that they eat or drink. They're drinking coffee. I don't drink any coffee. Like, I don't know. I don't know why people need coffee. Like, I sleep like 4.5, 5 hours a night. I got tons of energy all the time. I never get sick. Like, why do people need coffee? I mean, if you eat right, I don't think you need any coffee. And then stuff like coffee or tea, this stuff tends to exacerbate feelings of like anxiousness and having to do stuff. You see people who drink this and they're always like tapping their foot, or they're nervously twitching, or all of this stuff. And then there's other stuff like alcohol that's even like more damaging to your ability to concentrate and sleep well and stuff like that. So I think that it's a large combination of all of this stuff. You have to get your body in the right condition. You got to get your mind in the right condition. You got to get your emotions in the right condition. And if you're out of order, like, you're going to get disciplined. It's probably going to be through a form of debt. You're going to get yourself in debt, and then you're going to get disciplined externally by the creditor, or however else our modern society tends to discipline people who can't discipline themselves. And so it's much better, in my opinion, to just discipline yourself and do the work, like, than have somebody kind of force you into economic circumstances where you're now the servant to the lender, right?
Excellent. And I'm interested now to talk a little bit around if you've got any views around jurisdictional competition around the world. So I know you have, you're doing some work with Wyoming, for example. Do you see, in terms of Bitcoin and jurisdictions around the world, so let's say jurisdictions that, for example, have no capital gains tax laws, or other examples like that, do you see a potential for competition there?
Oh yeah, there's definitely going to be competition here because we've got this monetary asset that we're able to transfer value over a communications protocol. So it becomes much more portable than gold, for example. And so, in whichever nation state adopts the hardest, soundest money, or individual for that matter, has a tremendous competitive advantage over somebody who's fighting the economic war with inferior tools. Like, it's just the way it is. And so, Singapore's been very progressive on this front. The United States is pretty much middle of the road, but they've got a lot of stuff where the groundwork is now being laid. You've got the bit license in New York, which I'd stay away from anything New York related. But then you got Wyoming. I've actually helped craft some of the bills and the banking rules, because we're going to be able to create a special purpose depository bank, full-fledged bank in Wyoming that's regulated by the banking commissioner, passported into 42 states. I mean, that's a huge deal. It can custody digital assets. We have property rights on the digital assets. One of the things I got in was a lien cleansing provision on UCC liens. I mean, that's huge. Like, if you buy Bitcoin from somebody, you want to know you have clear title to it. Because the legal system doesn't recognize the Bitcoin network any more than the Bitcoin network recognizes the legal system. And you might have a technological fortress, but wouldn't you want a legal fortress also? And so, these Wyoming laws those are laws that a hodler of last resort would write, in my opinion, or got as close as we could. And then you've got other jurisdictions that are just going the other way. They're banning it. They're trying to ban Bitcoin, or like, look at India. You can withdraw $140 from your savings account. Like, oh boy, that's confidence inspiring. And so, when capital is so much more portable like this and can't be confiscated through inflation, can't be confiscated through traditional means, like, ask the Incas about getting their gold confiscated, right? Like, they could kill you and take your gold, but like in Bitcoin's case, it's more difficult than that. So I think that we're definitely going to be seeing jurisdictional arbitrage. The U.S. overall and balance seems to be the best jurisdiction so far. We've got the CFTC that's started handing out swap execution facility, derivatives clearing organization, and designated contract market licenses. We've got Wyoming with the special purpose depository bank. We have New York with the BIT license. We have trust company charters in various states. We have other model legislation coming up in many of these states. Rhode Island, for example, is working on perfecting security interests. So, that sixth network effect of financialization of Bitcoin, not only with the puts and calls and the futures, but also with security interests in order to start using it as collateral. All these things are instrumental in its path towards world reserve settlement currency, which ultimately is where I see it going as its destiny. And as you alluded to, those 7 network effects are in full swing and barely just growing out right now. But like this thing's it's got some unstoppable momentum to it.
Fantastic. And I'm curious as well, with the Wyoming work that you're doing, is there any risk there at the federal level in terms of federal government regulations or impacting on the freedoms that you're trying to work towards with Wyoming?
Yeah, so this is a somewhat nuanced point when you're dealing in American law. So under American law, you've got the federal government, and under Article 1, Section 8, it's got specific areas it's able to legislate in, and then you've got the states. Well, one of the provinces of the states is property rights. So guess what? One of the first things we did in the Wyoming legislation, we called these digital assets property. Okay, because the states, why well, back in the day it was New York and Virginia and everything, they form the federal government. So the states are sovereign and the federal government is sovereign. And if there's a case or controversy between a state and the federal government, it goes right to the US Supreme Court. of the US Supreme Court. So I mean, like, the states are sovereign in this regard, and that's one of the reasons, like with Wyoming, the first thing we ran out and did was we said that these digital assets are property and defined by state law. And we mapped on a taxonomy onto the UCC in order to do that, because Caitlin's brilliant and that's what she does, right? And so that's, I think that if the federal government did try to get into this, they're going to start running into constitutional challenges. I mean, we've put a bunch of different landmines like that into the Wyoming legislation. Property is just the biggest one I want to point out. But there are a lot of other smaller, sneakier ones. For example, under federal law, a bank holding company, the bank has to be a bank and lend. So a Wyoming special purpose depository bank is prohibited by statute from lending. Therefore, a Speedy Bank in Wyoming does not count as a bank under the Bank Holding Act, which really, for investors and stuff out there, I mean, that's a big deal. So, we put different landmines in there and everything, being able to avoid the FDIC, since they like to engage in financial repression and banking blockades against things like WikiLeaks. Well, guess what? The Speedy Bank gets a Fed master account. Oh, and like a lot of these exchanges, they need to do stuff internationally, right? Well, guess what? With a Fed master account, you can have dollars and you can have euros. All right. So, like, I mean, there's just a lot of really cool, sneaky stuff that we put in that, when a lot of these companies realize what we've done in terms of laying the foundation, because in order for there to be large capital, you've got to have certainty for the investors. And that's what rule of law does. And so that's what this foundation does, is it lays a foundation for, this human action and this cooperation to take place through the institution of a corporation. And that's otherwise you're not going to have the certainty, and you're not going to be able to grow or scale in terms of the social scalability and the growth and the size of the companies without it. And so that's what we've really done with the Wyoming legislation, is we've been laying this foundation to be able to take Bitcoin to a whole new level in terms of integration or backwards compatibility with the current institutions and structures that humanity have used to form themselves and do corporate governance and capital allocation and all of that stuff.
I really like the point you were making around regime uncertainty and doing what you can to allay that uncertainty so that Bitcoin businesses, entrepreneurs, investors can feel more safe as they enter the space. Do you have any views on what jurisdictions around the world, what can people do to outline that and spell that out as well? Like, not just for Wyoming, but just to outline that, look, if you come out and put these laws that are very anti-Bitcoin, you're basically shooting yourselves in the foot.
Yeah, I mean, and it's not just Bitcoin, right? Like, how solid are your property rights in Argentina or Rwanda? Like, when those property rights aren't very solid because there's not very much confidence in the rule of law, then the assets that are in those jurisdictions get discounted relative to a safer jurisdiction. And what Bitcoin does, in my opinion, is it enables us to acquire property rights at a much lower cost, because we're effectively able to acquire protection of our assets or our purchasing power that we store in the Bitcoin just with a private key. And okay, so we're getting it inflated by new mining rewards, but everybody knows what that is. So that gets discounted into the present price anyways. So really, when we're looking at what would the negative interest rate be on storing capital in Bitcoin, it's going to be lower than other assets. Because the other assets have counterparty risk. They have negative interest rates in the bank accounts, and it's not really apples and oranges right now because Bitcoin's just so small relative to the other ones. But, when Bitcoin becomes its own storage tank, right now it's empty, but when it's filled up and then capital is moving between the different storage tanks and I mean the different types of assets that the world has to store capital in, that's when we're going to see Bitcoin really begin to shine, because it's this global monetary unit, can't be inflated, hardest money ever, the new risk-free asset, because there's no counterparty risk. And what I mean by that is there's no financial ability to pay. There's no performance risk if you have your own full node and holding your own private keys. I mean, you're really removing all the risk away and starting from a first principle, and that becomes your risk-free asset and your risk-free rate, and then you move out from there. And in order to move out from there, you're going to start assessing the regime risk or the uncertainty that you're going to get bailed in, for example, or that the bank will get bailed out, or that your property is just going to get confiscated, or maybe it's a piece of real estate in Chicago and your property taxes are going to have to go up in order to pay the unfunded pension liabilities, or whatever it is, right? With Bitcoin, like, Bitcoin fixes this. Like, it fixes all of this for people who are trying to perform economic calculation. It's got a specific definition that's enforced by our network and all the full nodes. And once we have that definition, because U.S. dollars, they're not defined, euros aren't defined, Australian dollars aren't defined. Like, none of these things are defined. They're all just ephemeral illusions. Even under federal law in the U.S., dollars are defined as different things that are unintelligible. For example, 1 ounce of fine silver is $1, and 1 ounce of fine gold is $50. But 50 ounces of fine silver is not equal to 1 ounce of fine gold on the periodic table. That's unintelligible. Like, if you tried to build a building and you were performing mental calculations of length with that type of unintelligibility, your buildings would be falling over. So, it's not any wonder that the financial system is all falling over, because the fundamental unit that's being used by people to perform economic calculation is undefined and unconstitutional. And yet, we're just all hobbling along because, while there's no way to avoid the final crack up boom, but we've seemed to find ways to delay it here and there through all of this privatizing of the gains and socializing of the losses. And Bitcoin puts an end to all of that. Like, look at Mt. Gox. Look at Quadriga CX. Look at all these examples throughout Bitcoin history where people took the losses. They didn't get bailed out. And that's the type of mindset or mentality that the holders of capital on the other side of this gulf are going to have.
It's a great point you make about regime risk. And I'm curious now just to ask if you see any existential threats to Bitcoin, perhaps, whether they are a state-sponsored attack or otherwise.
Not really. I mean, this thing is a beast. As Mises wrote, ideas can only be overcome by other ideas. And so, what could a state-sponsored attack actually do? Like, what are you going to do? Get some developers in there and try to compromise the code? I mean, we got hundreds of eyeballs on that code with pull requests in every new version that's coming out. Plus, you can run a version from years ago and it's still going to be in consensus. And you can't force anybody to run your code, and there with GUIX, it's making the build process even less trust involved in the build process, however small. So I mean, what's a state-sponsored attack going to be? You're gonna have like some rogue developer in there trying to compromise a constant, like they did with NIST. When they compromised one of the constants in a protocol that they then signed off as being secure, and so CISOs relied on it, and then they all got hacked because they were using a bad cryptographic standard. Like, there are just a lot more eyeballs on Bitcoin because there's how many billions of dollars at risk. So people are not taking any risk in that regard. So, if you are a rogue developer that's trying to cause a stink, I think you've already got yourself ran out of town. And how do you get back into town? Like, when the wagons have circled, you got to earn street cred. Well, how do you earn street cred? Well, it's been a decade. Like, it's going to take new people that try to get involved in this a while to earn street cred. And so that's on the developer front. And then, a lot of different altcoin promoters and stuff, they really don't like Bitcoin maximalists, whatever that's supposed to mean. And it's like, well, okay, well, that's the other realm of getting street cred. Like, what are you going to be, some shady fly by night like altcoin promoter? And or who are you going to listen to? Like, what you going to do? Who are you going to listen to? You going to listen to someone like me who's had a consistent voice for pretty much a decade for free for everybody and been right and called in advance like all the bull markets? Or are you going to listen to some fly-by-night shady like altcoin promoter who's just going to pay his $24 million fine to the SEC for doing an unregistered securities offering so that he could flip a bunch of money to Peter Thiel and his other cronies, right? Because Peter made like over $100 million on EOS. So, you've got to be extremely careful, like what voices you're going to be listening to and why you're listening to them. And getting street cred in Bitcoin, I think, is going to get increasingly more difficult also, because, just like with the developers, you're going to have to get street cred. And how are you going to get street cred? You're going to have a consistent voice that's kind of in consensus with everybody else. And don't get me wrong, like, I mean, I've talked about other coins and stuff like that, and I've even, interviewed some people on my podcast about them when I think that there's interesting innovations in the altcoins. But, like, do I think any of those altcoins are going to pose a serious threat to Bitcoin? Like, good luck with that. I mean, we got 7 network effects. Like, show me where they're possibly like taking any territory in any single one of the network effects, let alone all of them at the same time. So, I think, threats to Bitcoin, it's really hard. It's not like it was, back when I first started talking about it, where we were a small community of, a very, very small community of just very few people. I mean, you probably could have like gone and rounded us all up one night, but like, we're a lot bigger than that now. Like, the community is huge. I think 35 million unique AML KYC accounts. at the end of 2017, based on one of the Bloomberg articles. I mean, there are tens of millions of people all over the globe like working on this stuff now. Like it's an entire industry, and there's a lot of money at stake. And the financial incentives in the game theory are just taking root now, and it's all playing out kind of how a lot of these early consistent voices have said it would. And so, the threats to Bitcoin, I think, are going to be in the realm of ideas more than anything else, really. And that's going to be for each of us to maintain vigilance in that area. That's one of the reasons last year I started Proof of Keys, proofofkeys.com, because every year we're going to have a global coordinated bank run on the asset that's strictly limited in amount, right? Like we decapitated Quadriga CX last year. No, for real. Like they're gone. I did Proof of Keys. A week later, he met with his attorney to plan the will. A week after that, he died in India. And then his wife took his body from the hospital back to the hotel. Like, whatever. But that bad actor is now out of the industry. They're gone. And that's the power that people get with Proof of Keys. Like I talked with Peter McCormick over on What Bitcoin Did about this. And when he did Proof of Keys, he found half a Bitcoin in an account that he totally forgot about. So having good personal hygiene, you're gonna develop that human capital to run your own full node and have your own private keys. We've got resources on proofofkeys.com to help people, figure out the procedures, like a Purism laptop and smartcustody.com and glacierprotocol.org, all this stuff, because we have to help people get up to speed on developing this human capital, because when people are holding their own private keys and have their own full nodes, the Bitcoin network is so much stronger that way, because the technology can get monetary sovereignty out there, but it's going to take the political will to keep it there. And that political will is going to have to be in each individual, because their money's at stake now. And so they're going to start making a stink with their politicians about this stuff.
Do you see any threats around privacy in Bitcoin and individuals who, let's say, have performed KYC, and now there's any sort of risks to those individuals if they're not careful around their Bitcoin privacy?
Oh, yeah. I mean, like AML KYC is a difficult one, because, I mean, you're not going to get any of these institutions unless people do that. And, a lot of legitimate actors, quote unquote, like pension funds or whatever, they're only going to really invest in this stuff if they have that legal certainty. So it becomes a requirement almost in order to get the large amounts of money. Now, and as long as Bitcoin's got the lowest price in terms of time, money, and privacy, in a combination of that, it's going to be able to outcompete the other instruments there. So, this, like at the fundamental level, I mean, it's really difficult to have that pure anonymity with Bitcoin, because there's so much of an industry now built for all this AML, Chainalysis and CipherTrace and whoever these institutions are, because they're serving a different customer. They're not serving you or me. They're serving a government. But guess what? Government's got like big sticks, and they can whack you with them. And so, that's kind of what you gotta deal with. And that's where I think Bitcoin actually could face a little bit of a threat. Where it won't necessarily have 100% market share in all the different type of stuff, because, with things like Mimblewimble, we can have much more private, fungible, and anonymous digital transfer tokens. And so I could see some of these more nefarious use cases migrating towards coins like that instead of using Bitcoin. I think that's already kind of been the case. You're seeing a lot of the markets move over to stuff like that. So, that's definitely something to be cognizant of. Don't do Don't do stuff that's going to land you in jail for life with two life sentences with no opportunity for parole. Like how many Bitcoins was that worth? And he's never getting out, by the way. The only way he'd get out is a presidential pardon because he lost his appeal. I mean, he's done. So like, there's no reason to donate to free Ross or anything like that. Like, because he's done. He's never getting out. Period. And that's what you know, people should value their freedom. That's why I pay all my taxes. I might not like to, but I just don't want to be looking over my shoulder in that regard. And I think that everybody's got a different way that they're going to interact with the institution of the state. But I'm just not one to go out and get shot in the chest in Hong Kong. Like, I'm going to get on a plane and I'm going to leave, and I'm going to hopefully have my ability to maintain my standard of living wherever I land. And Bitcoin now gives us much more mobility in that sense, and capital, both human and economic, can become much more portable. So, just avail yourself of that increased freedom that we've got.
And I guess one other point around threats to Bitcoin, there is discussion around the centralization of mining, and it appears to me that it is increasingly decentralizing. What's your view around mining centralization and the theoretical risk, reducing as it may be, of mining centralization? Censorship of transactions by a miner.
Yeah, just ask Gian how much power he's got, right? Yeah, don't pick a fight with the hodlers. That's a bad idea, bud. Yeah, I've mined everything from laptop to ASICs, and the miners, like, I really don't think that they have as much. They're just really, I just don't really feel there's like a lot to be scared of there, especially if they're playing a game where they're trying to have an increased ROI in terms of Bitcoin. Because, large hodlers, they can step in and buy a ton of mining hardware if they want to protect the network. So, and what are the miners going to do anyways? Like, you're going to roll back a transaction? Like, that's it, and yet there's a good amount of money to be made there with the block reward. And so as the ASICs have gotten more distributed, I think that we're seeing the power. There was a time where miners had more power because of the centralization. And that happened when we shifted from CPU to GPU also, by the way. And then from GPU to FPGA, and then from FPGA to ASIC. And, now that we're on ASIC and we're on this particular hashing algorithm, and more equipment is getting out there in a lot more different distributed hands, I think that this centralization of power with the miners is actually being spread out much more horizontally now. And that overall, I think, is a good thing. But it's difficult. Like, mining is a hard business. And like, okay, so you're mining and you're trying to get a return in Bitcoin, and yet you've got you want to be nefarious, but you've got these hodlers that are able to get a return in Bitcoin by selling derivatives now. So hodlers are basically able to sell covered calls and mine Bitcoin that way with just their Bitcoin, right? Sell an October 25K strike. Very unlikely that it's going to get exercised, and yet you get a little bit of premium that way. So hodlers, they're actually able to start generating cash flow in the derivatives markets. And so miners have to be cognizant of that also if they were to try to be nefarious or bad actors. And so I think the game theory is just playing out the way one should have expected it to play out, and the way that it did with Bitcoin Cash. And as far as I'm concerned, like, let's have more of this stuff. Like, that was great. Like, I'd like some more of that.
So you mentioned ROI in Bitcoin terms. Now, that's a challenge as well, because many people in this space, it depends what is their unit of account. Are they thinking in terms of fiat, right, US dollar? And as you have mentioned, you you compare from both the US dollar, gold, and Bitcoin terms in terms of am I making a profit on this deal or this investment? It has historically been very difficult for investors to earn in Bitcoin terms. You can probably count on maybe one or maybe two hands the number of Bitcoin companies who would have returned in Bitcoin terms. So, in your view, does that represent a challenge for the space to grow? Will people simply say, I'd rather just hodl my Bitcoins rather than invest? What's your view there?
Yeah, well, one, yeah, I think it's great to just hodl your bitcoins instead of invest in these. I mean, you have to pick very well. You have chosen wisely. You've chosen poorly, right? Like you're going to age a lot faster when you choose unwisely. Uh, let's look at Pantera or Barry Silbert, for example. Investing in 150 plus like startups. I've invested in three. One of them was just because I wanted cold storage software to be built, so that one didn't really count. But even with my other two, I'm mark to market. I'm up like in Bitcoin, but I have the liquidity discount that needs to be applied, right? Because I can't just like sell my shares like whenever I want, like you can with Bitcoin, and I can't use them to post as collateral to sell covered calls. So I've got opportunity cost. And selling these covered calls, I mean, this is a beautiful tool for hodlers because you're able to, you take on some performance risk. You don't take on counterparty risk because they're not on the institution's balance sheet. They're held and segregated off balance sheet. And you're able to sell very far out of the money calls and you pick up a little bit of premium here and there, because you're effectively selling vol. Sure, you might get exercise, but the probability is very low. And even if you did, you'd probably be happy because the Mayer multiple would be excessively high at that time. And so you'd be able to turn around and sell a put or something with the USD that you got. But this type of financialization is increasingly going to be coming into the space. And the people who are managing the portfolios and managing the assets, large assets, they're going to have to look at the Sharpe ratio, the risk reward return on Bitcoin. They're going to have to look at that. They're going to have to decide, like, you know what, I have to be invested in this asset class because of the Sharpe ratio. And okay, so they start getting invested in the asset class. Like, how are they going to do it? And if they're smart, they're going to sell puts, and then they're going to turn around and sell calls, like when they get the Bitcoins. But for people on the other side, for hodlers of last resort, people who have a conviction in holding the Bitcoin, part of the problem when you're selling this vol is, okay, so you got $300 of premium on the contract, but your collateral went down $4,000. Right? Like, so you're actually down 3,700 measured in USD, even though you're up measured in Bitcoin. Right? So it's going to give people a lot of opportunity based on how they perform their own economic calculation and what they prioritize in terms of portfolio management and strategy. I try to have a gain in dollars, gold, and Bitcoin. Like I actually keep financial statements in all three of those every month, and I make fancy little charts and graphs and stuff like that. And so as we have this transition to a new world reserve settlement currency that's going to happen one by one, and there's 7 billion people on this planet, so it's probably going to take a while. There's going to be a lot of just different strategies that are gonna produce winners for two people. One person's going to be up in dollars, the other's going to be up in Bitcoin. They're both going to be happy, and everybody's going to be going down the road. Now, who's actually going to be up in terms of purchasing power? That's going to be the multi-trillion-dollar question, right? And I would argue that it's going to be, in the medium to long term, it's going to be the holders of Bitcoin. as opposed to holders of dollars. And what I mean by that is like a 4-year plus time horizon or greater. And so, okay, yeah, you might get a little bit of a dollar gain in the short term, but if you got this 4+ year time horizon, you're going to have to be in Bitcoin. And I'd really like to see, some of these options be much more longer dated, because right now we have December 2020 is the furthest out options we can write. But I'd love to see like 2022, 2024, 2028, and like just start layering out like calls all the way out there based on stock to flow, and getting all that USD in the present, like acquiring more Bitcoin in the short term. I mean, there's a lot we could do to manage portfolios. And also on this point is going to be carry trade, because we've got these negative interest rates on a lot of these currencies and negative interest rate debt, both government and corporate, almost 20 trillion or something insane. Like, why not borrow a bunch of these illusions that aren't defined, that are not limited in amount, and buy something that's totally limited in amount that you can hedge, by selling puts or covered calls or something on, so you can generate a yield, generate that positive yield in the carry trade. And that'll just suck more and more capital into this black hole on the world's debt-based financial statements, that transports everybody into a new equity-based dimension.
Excellent. Yeah, there's a lot to take in there, and I think a lot of it also plays into this idea of how quickly will perceptions shift? So some skeptics right now might say, oh, the government will shut down Bitcoin, or oh, it's just a bunch of Uber drivers who are trading and so on. But then the perception changes, right? And so even now, there was the recent news about a Venezuelan state-owned company seeking permission or asking whether the Venezuelan central bank could use Bitcoin. So have you got any comments around how the perception shifts will happen over the next few years?
Man, never underestimate people's capacity to watch cat videos on the internet. Like, it's just how people are allocating their capital. I mean, Bitcoin's been around for a decade. It's been majorly in the press, like in like 2 or 3 cycles now, where everybody's heard of it. And yet people still haven't done their homework. They still haven't put in the effort to figure out how to use this thing, to buy it, to secure it. Even a lot of people in the space are still holding their keys on institutions, not taking things like proof of keys seriously. And so, we just keep having failure after failure, and people keep learning the hard way, getting their stripes. And, I think that's just going to be how it's probably just going to be that way. And it's going to be a long transition. A lot of people are like, oh, I totally would have bought Bitcoin at $10. Well, you would have sold it, when it went to 12, like, because you didn't put in the effort to figure out how to learn it and understand it and all of these things. And so I think it's very similar. You look at stock to flow, and it's not going to be below 100,000 by December 2021 based on that model, which is co-integrated. I mean, co-integration is a big deal. And so what's Bitcoin going to do? It's currently, most people think it's dead, and 24 months from now it could be over $100,000, and yet people are going to be like, oh, I think I missed it, and then like 4 years after that it's going to go to $1 million, and people are going to think they missed it again. When really what they're missing out on is, if it really does become world reserve settlement currency, and it becomes that risk-free asset that corporations are holding their retained earnings in and all of this stuff, I mean, you're talking about, this is a claim on the future productivity of the planet in perpetuity, discounted to the present. I think we really underestimate just how much governments through fiat currency have siphoned off the purchasing power of the average person. My father, for example, when he graduated from college, his first job, $900 a month, 25.7 ounces of gold. That's like $500,000 a year for a brand new kid out of college. That's how much of a shortage we should have when it comes to human labor in order to get people to actually go out and be doing stuff. But instead, we all the productivity from the internet and spreadsheets and all this stuff just gets siphoned away into the military industrial complex and the health industrial complex and bureaucracy and all this other stuff. And they're primarily able to do it because of fiat currency and fractional reserve banking and being able to confiscate their inflation. But you take that ability away, and you have like self-reliance and economic substantive due process, and you have technological tools that protect and enforce it. And now the individual, is able to keep the fruits of their labor. And I think we might be surprised at just how many fruits there actually are.
No, totally. I 100% agree with you. And you made a great comment about how we may be seeing the growth of this new risk-free asset and how it may be much more powerful in terms of being collateral. It may be the collateral demanded. Do you have any comments on how that space may evolve using Bitcoin as collateral?
Yeah, I mean, I see it as the ultimate collateral, because it's strictly limited in amount. You can hold the private keys. You got your full node for consensus. A lot of the value for the dollar is that you have to get dollars to pay debt. There's like $73 trillion of US dollar denominated debt out there. So that, you have to get a lot of dollars to pay that debt. And so the Fed, what they really have is it's like they have control of the throttle, but so they can change like the amount of mixture that goes into the engine, but they can't really, control what happens after that, as they're starting to find out with this repo market mess. But, so I think that's, when we're talking about collateral and the ultimate collateral, it's something that they can't print. You got to get stuff they can't print. And so then, when you're talking about true liquidity, okay, well, they can have an unlimited number of dollar liquidity because they can just print that to the moon. But to get actual real liquidity, that's limited in amount, like how are you going to get liquidity for a proof of keys event 15 or 20 years from now? When assuming we're still doing it, which I don't see any reason why we wouldn't, and a lot of the Bitcoiners are going to have more than enough money, kind of like Roger, to be having whatever fun they want to have with their media properties, which Buffett says have value besides just their earnings, because media properties can be a lot of fun, as I'm sure you know. And so, I don't see Bitcoiners I don't see them being silent like 15 or 20 years from now. And so they're probably going to I remember the first proof of keys when I was not in a wheelchair or whatever, right? They're just going to have a much longer time horizon. They're not going to be taking people's crap because they grew up in the greatest depression, with massive bailouts and huge amounts of student debt. And they had to claw their way out of this. And all they had on their side was math. And yet they were able to fix, so many things because of getting in on sound money. And so that's just going to change, the culture and all that stuff. And so when it comes to liquidity and it comes to collateral, it's going to be hard to get these people with this type of a mindset to actually be willing to take risk, and
Right.
lend people the ultimate collateral.
Right.
How's the person going to actually be able to generate a return on that?
Right.
I mean, imagine if you took out $100,000 loan but denominated in Bitcoin 3 years ago, bankruptcy. You're done.
Right. And we were speaking earlier around stock to flow and what the implications of that are. So in my most recent interview with Plan B, we were talking about this idea of how many more cycles. And I think he was basically making the point that potentially after 2028, it may not make sense to measure things in USD terms. But what's your view there around how many cycles? Do you have any thoughts on that?
Man, yeah, after 2020, something's going to have to give with this model. It'll probably be the US dollar, as you've implied. but even that, 2028 just seems way too soon. I mean, that's only 8 years from now. I don't really see society and culture moving that much that fast. But hey, 8 years ago, like YouTube was just barely a thing, right? And now it shapes like presidential elections all over the place. And like 12 years ago, like Facebook was barely a thing. And now it's getting hauled in as the boogeyman to Capitol Hill all the time. And 8 years ago, Twitter was barely a thing. And now President Trump, like, Twitter largely helped propel him into the White House. So, the rate at which technology can just, man, it's just stuff's happening so fast, and that's what's really scary, I think, for at least if you don't own any Bitcoin, because I mean it's all digital now with 24/7 markets. That's how fast everything can happen. You could wake up tomorrow and like the dollar could be done, and the fiat system could be done. Like that's just how fast everything moves now, and so. Yeah, I mean, I don't think it'll move that fast. You look at my book, The Great Credit Contraction, and what's at the bottom of that liquidity pyramid. It's U.S. dollars at the and gold and silver at the tip. Bitcoin, I would argue, is increasingly becoming more of that tip at the bottom of the liquidity pyramid, and that the fiat currencies, that will be the last layer to deflate through hyperinflation. If you understand like the original Austrian terms, deflation being a decrease in the money supply and inflation being an increase in the money supply. And so it'll be an increase in the money supply through hyperinflation that kills the fiat currencies as capital burrows into the safest, most liquid assets. And so that'll actually be deflation because the size of the liquidity pyramid will be shrinking. If
Right,
that
a
makes
credit
sense.
contraction.
A credit
right?
contraction. So, I mean, that would be one of the scenarios where it could happen extremely quickly like that. We just all wake up and dollars and euros and yen are just all done. But I just don't really see that happening. I mean, pension funds move so slow. Like so many people move so slow with, I mean, it's just, and those financial markets are so deep and they're so liquid. Like the U.S. financial markets are so deep. I just don't really see. I just don't really see stuff happening overnight. So instead, I suppose it'll probably just be a slow burn, kind of like it has been, which will be plenty of opportunity to sell lots of covered calls and make a lot of money. Selling volatility in this whole transition. And give fund managers opportunity to outperform in USD terms or whatever, but not in BTC terms. It's just there's a lot up for grabs all at once, I think, in this big. We're just in such an age of transition, political power, technological power, monetary power. Like this is just such a huge upheaval in terms of human history.
Yeah, I love that. I love the comments there. I think maybe sort of like a closing comment. What sort of things does Bitcoin need at this point? So some of the ideas that you might hear in the Bitcoin community, they say, okay, what about education, more developers and code review, more Bitcoin businesses, or maybe more development on privacy? Do you have any thoughts on that?
Man, Bitcoin always needs more holders, like hodlers of last resort. That is the foundation of Bitcoin right there. It's people who will buy it when nobody else will, and people who just won't ever sell it, and that's what Bitcoin needs, and it needs its current hodlers to become even stronger financially, which is selling those covered calls, for example. That's a way that you can be taking territory on the Bitcoin blockchain and becoming stronger financially without just getting your ultimate collateral to start working for you. And also the technological development is very important. I like the second layer things that are happening, like Lightning Network, Simplicity, Schnorr signatures, Taproot, Graphroot. If we can get a lot of this stuff in, Mast, Mimblewimble, that's kind of outside of Bitcoin, but because I don't see that getting merged in anytime soon. But the financial innovation can still take place over on other coins, and if it works there, then we can merge it in. Like look at Litecoin, we activated SegWit there first. Someone put $1 million in an address. Nobody stole it. That's kind of a nice test net, right? So, these are the types of things, the technological development. We need people who are just they're committed to the cause. They're those hodlers of last resort. They get in, they start working on stuff. Keep in mind when you're educating people, you're actually training your competition for those scarce satoshis. That might not be the best idea. I think the first decade was a decade of altruism, but this next decade, as Plan B talked about, with the Black-Scholes model, there was a decade where that model was able to be exploited before everybody kind of wised up to it. And I think this decade might be that decade for Bitcoin. And so this might be the decade of competition. The first decade was the decade of altruism. This next decade might be the decade of competition for those satoshis. And so I don't know why people think that they need to spend a bunch of money like educating people for free to become their competition. I did it because I wanted to gather a core of gold bugs and libertarians so that there would be a particular political constitution among the main early adopters of Bitcoin. And then if they're the beneficiaries of this wealth transfer, then they're going to change the political constitution of the world, because they're going to have a lot of money to do it with. So I had ulterior motives, you could say, besides just spreading Bitcoin in that sense. I wanted to spread Bitcoin to particular niches of people that shared particular ideologies. But now Bitcoin's kind of out there for everybody. Do you really want a bunch of Bernie Sanders supporters to have a bunch of Bitcoin?
Right.
I just don't know that that's the wisest thing, because now you're arming them with a bunch of financial resources, so at your own expense. What's the age-old axiom? He who has the gold makes the rules. So this is the age of competition, and so who's going to have the Bitcoins? 10 years from now,
yeah.
Like who's going to have them, and who do we want to have them? Is another question.
Who do you want?
And so,
I was just saying.
Yeah, I want Bitcoin hodlers to have them. I want people who understand Austrian economics to have them. I want people who have a good time preference, good sense of opportunity cost. Who I'd prefer they be self-made as opposed to some trust fund baby. People who've really had to be scrappy. Those are the people that I want to have the Bitcoins. Instead of having them go to whatever trust fund babies. Like we just don't need more of that. The sooner they burn through all that intergenerational wealth, and the sooner that intergenerational wealth gets transferred to a new generation who's got values that are more conducive to building civilization because of this time preference difference, the better, in my opinion. That's who I'd like to see having the Bitcoins.
These are the people you want as your neighbors in the Bitcoin citadels.
I suppose.
But look, I've really enjoyed chatting with you, Trace. Do you want to just take an opportunity to tell my listeners where can they find you, and obviously tell them about Proof of Keys?
Oh yeah, so Proof of Keys, we mentioned it. It's going to be super fun this year because we're gonna have more than just 3 weeks of preparation. Already starting to beat the drum, I guess now. Proofofkeys.com. Remember, not your keys, not your Bitcoin. And we'll be changing little things on our Twitter handles to put like the key and the lock and all this stuff to raise awareness with that. I think we're 95 days out or 94 days out right now. Maybe we'll do that in about another month or so, about 60 days out. So proofofkeys.com. And then I'm on Twitter at Trace Mayer. And also I host the Bitcoin Knowledge Podcast. So www.bitcoin.kn. And thanks so much for having me. I mean, I really appreciate the work that you're doing. We need more people kind of carrying the standard, waving the banner around. And so yeah, I'm really happy with the work that you're doing, and just keep it up. It's hard work getting all these interviews done and being able to prepare for them and stuff like that. And so give you props for that.
Well, thank you very much, Trace. It's been a pleasure to chat with you. So thank you for joining me. So what did you think of that? Do you think Bitcoin could someday be the ultimate collateral? I hope you enjoyed the podcast. Just remember, share it with your friends and family. I truly believe it's one of the fastest ways for people to catch up and get up to speed on Bitcoin. The show notes, the transcript, and the links to subscribe are on my website, stephanlivera.com. Thanks for listening, and I'll see you in the Citadels.